Boom. All right. Let me share my screen and let's go over to trading view. Boom. All right. So the first thing before I want to look at any indicators, I like to check the news. And wait, I'm going to the wrong area. Products. So if you want to check the news, or not the news, but the economic calendar, sorry. I like to check the economic calendar because I like to know what important speeches or conferences or reports that are going to be coming out during the week, especially if I'm swing trading or if I'm looking at buying the dip on certain stocks. I need to know, key information when these major reports are coming out. So if Jerome Powell is going to speak, if we're going to have a job report come out, if we're going to have an inflation report come out, those are the things that I'm looking for. Those are the top three, actually. Jerome Powell, at any point in given time, Jerome Powell, inflation reports, job reports are the top reports that I'm looking at right now. So what we'll do is go down to calendar, and then we go to economic, and then we're looking at the economic calendar. Let me change it for this week. All right, so you can also toggle, I know some of us aren't in the US, so you can toggle this and switch the country, or you can add the US and, your whatever country you're from onto the list so you can see what things are going to be affecting these stocks in your country. But looking at the US for now, what I also like to do is turn on this only high importance button. It kind of filters out everything. As you can see, there's a lot of reports and a lot of stuff to just sift through, and it's kind of hard to figure out what you should be paying attention to and what you could glance over. So we turn this on. We can see that on Monday we don't have anything major. Not saying that anything is not, any reports aren't being dropped, but there's no major reports. Tuesday we do have the PPI, and the PPI is the producer price inflation report. So you can look at the different actual and forecasts if you're into these. If not, just know that a good reading is going to send the market up. A bad reading is going to send the market down. And reports like this are the reports that you want to be careful of, especially in a time to where the Feds are saying that they're going to do, they're saying that interest rate cuts are on the table. I've been hearing that since March. Now we're August, almost September. So hopefully we get some in September, if not November. But these reports are going to be what the Feds are going to use to gauge if we're going to get them or not. So we got Tuesday, we got a PPI. Wednesday, we have core inflation rate and inflation rate. So these are going to be important as well. So Tuesday and Wednesday, just be ready for some volatility. When I say volatility, that could be up or down. It's just going to be volatile. It's going to be a bumpy ride going into Tuesday and Wednesday because of these two reports. Thursday, we have retail sales. Thursday is also another day where we have a job report that comes out every Thursday at 8:30. So for my option traders, you may want to be a little careful on Thursdays because, again, at 8:30 Eastern Standard, these reports come out. And if you're in a trade, and let's say you're in a weekly option contract, you can't really do anything until 9:30 Eastern Standard. So this report has a whole hour to do whatever it needs to do to the market, and you don't want your option getting caught up in that. So Thursday is always, or Wednesday evening, if I'm in a weekly option, I always either take profit or extend it or roll it forward. And then Friday, we have built-in permits, preliminary. So yeah, it looks like, a jam-packed week as far as inflation goes. But this is going to be good for us to know moving forward if we're actually going to get the rate cut that we're expecting in September or not. The market is kind of leaning towards that we will get it. So that's what I'm going to go with for now. And that's how I'm going to look at my charts, is that the market is factoring it in. So we should get it. Now, these reports could swing it the other way, but I don't expect any major upsets or surprises this late in the game. But, you never know. Do I have any questions? Check the chat really quick. Cool. All right, let's keep it moving. Our indicator breakdown. So the first thing that I want to do is look at the SPY. The SPY is one of my favorite stocks. I'm going to clear some of these lines up. Anytime, I always tell people, anytime you see a lot of blue lines on my chart, that means that I've been charting or trading the stock a lot. And I'm gonna just do a clean reset for us today. Cool. All right. Actually, let me move this back to the 1 day. And yeah, we should be good. All right. So what we're looking at now is my chart setup for swing trades. I like to give people the disclaimer that you do not have to use every single indicator that I'm using. You can use the indicators that make sense to you and that makes the trade simpler for you. I always like to go with being simple over being complex. Sometimes we're unnecessarily complex in the way that we trade, and then we have information everywhere that doesn't actually help us figure out where to go, especially when we're in the trade. Before the trade is fine, but when you're actually putting your money in and you need more information to figure out where to go, sometimes you have an information overload. So again, you do not have to use all of these. When I first started trading, I did not use all of this, but I was definitely trading slower. I was using 50-day moving average and the 200-day moving average and waiting for crossover. So that's extremely slow. But we're going to start from the top and break down all of these different indicators and tell you how we use them. There are also two other ones that aren't shown, which is the VRVP. We'll talk about that one, and then the MA ribbon. So I'm going to hide them for now just to keep everything clean. But all right, so let's focus on the indicator at the top. And if you want to know the name of the indicator, you can look at the top left-hand corner. This indicator that we're about to pay attention to is the RSI. Oh, I turned it off. All right, so this is the RSI. The RSI stands for Relative Strength Index. This RSI indicator is going to tell you if a stock is either overbought or underbought. If a stock is overbought, you may not want to buy that stock because eventually it's going to cool off, right? So if a stock is overbought, that means that investors and traders have been buying the stock up at a relatively, I would say a fast pace based on the indicator itself. So if you're wondering, okay, have people been buying this or selling this, right? What you'll do is look at the RSI and you'll gauge it between the numbers that are on this right-hand side. So when you look at the right-hand side in this purple, the bottom is 30, the top is 70. Now you can adjust your RSI for the different time frames, but right now my RSI is set for the daily. I really do not like to adjust my RSI. There are different indicators that you can use to get the same or similar information that you could adjust. But for me, I just like the standard RSI, no adjustment, especially on the day when I'm looking for a swing trade. So the RSI, again, goes from 30 to 70. Currently, it is at 45. My rule of thumb when trading, when looking for swing trades, is that I like my RSI to be between 45 and 55 pointing up, right? So 45 to 55 pointing up will be in between this area and this area. The reason why I like 45 and 55 pointing up is because that means that the stock is warm enough for it to peak and go up into the 65s and 70s. Now, I don't solely make my decision off the RSI, but the RSI is one of the indicators that I check first before looking at my swing trade. For instance, if I look at my swing trade setup and I'm looking at the SPY and I'm like, okay, I need to find an opportunity, and the RSI is all the way up here in the 70s, I'm not going to touch it because we can see that every time we get a 70 plus RSI, it peaks and then it goes back down. All right, peaks, went down, peak, down. The last time we had above 70 RSI, came all the way back down to 30. So what I like to do again is to buy the RSI around the warm spot in the middle to where it actually has some momentum back to the upside, and then just take that RSI from, what is it, 45, from 45 to about 60, 65, and then go ahead and hop out. Now it could, spike up on you till 70. You could get caught, holding a stock where it's at 72, 73, but that's just a good indicator that you can go ahead and take profit. Again, first thing I look at, but it's not the only indicator that I check before I make my decision. This is just giving me the thumbs up that, hey, the stock that you're looking at is at a nice place to where you can check the other indicators to make a move to the upside. Do I have any questions on the RSI?
I got one. Sure. How come if you're looking for something that's going to swing back up, why wouldn't you get it while it's like lower, like below 30 or below 40?
Great question. Great question. Yeah. So you can buy low 30, 40 RSI. It's just sometimes you run the danger of it staying down there longer than you want it to. So normally, we like to hop in a trade and make money as fast as possible, because then you're racing against the clock to where something bad is going to happen, wars, news, drone power, whatever. But yeah, for me, anytime I'm buying a low RSI, I'm expecting to hold it longer. And that would be a long-term trade to me. So normally for my swings, I'm looking 45, 55 to where it's already, rebounding. And then I just can play a strip of that move up if I don't plan on holding it too long. Does that answer the question for you? Is that Tegan? Yeah.
Yep. Yeah, that does. Good
Cool.
answer. Thanks.
No problem. Any other questions? We're here to answer your questions. Cool. I'll take silence as a thumbs up. All right. Let's keep it moving. Main body of the chart. So this is the main body of the chart. Before I turn on my other indicators, let me make sure they're, yep. Before I turn on my other indicators, one thing that I like to just note, I always say this, if I can remember, but just pay attention to how the candles open and close. Later on, once you get into more advanced charting techniques and different strats and strategies, you're going to be playing off the open and close of candles the deeper you get. Right now, for the strategy that I'm teaching you, you don't have to worry about that, but it's also a good skill to dial in on how these green and red candles open and close. So if you're looking at a green candle, it's extremely simple. The green candle is representing that the stock went up in price on that day, right? So the way that we know that the stock went up that day is because the candle is green, yes, of course, but green indicates the direction of the growth of the price, right? So that means this candle started at 9:30 at the bottom, and throughout the day it went up, and about 4 o'clock when the market closed, it was here. So the open of the candle was at the bottom, close is at the top when you're looking at green candles. When you're looking at red candles, it is the opposite. It starts its day here. This is 9:30, and then at 4 o'clock Eastern Standard, 4 o'clock p.m., it stops here. So that means that it went down on that day. If these candles were all the same color, aside from the direction that it's going in, we really couldn't tell what's happening, especially when you get consolidation. So again, when you get consolidation and you're able to tell, okay, we opened here, we closed there, on the day we close lower, on the day we close higher, that's going to help you later on down the line. Again, when you start to blend the importance of how the candles open and close. Michael, you had a question?
Yes. Can you make money on a losing day?
Oh yeah, for sure. Yeah, you can make money. The easiest ways to make money on losing days where the market is red, the easiest ways would be to trade an inverse index, or people call them inverted indexes, which, like, let's say you have the SPY, and I'm going to bounce around for just 2 seconds. So if you wanted to make money on a losing day, since the market has been bleeding lately, you can do this. You can trade one of the things that I trade when the market is down is the VXX. So the VXX, you can see, skyrocketed. We got some red candles because of a pullback, but the VXX, before we had the pullback in the market, was down here at about 40. When the market was bleeding heavily, we're at about 90. So it pretty much doubled, or a little bit more than doubled, from 40 up to 90, came down to 70, settled at about 68. And then when the market finally cooled off, it came back down to 55. So the VXX is something you can trade short term while the market is going down. You can also trade, if you're trading the Qs, you can trade the SQQQ, and this also goes up when the Qs are going down. So you can find inverted or inverse indexes that go against the market, and they go up when the market goes down. You can also buy shares to hedge, to protect your holdings, so on and so forth. That's one way. Another way would be to buy put contracts. You can buy contracts that bet, option contracts that bet on a stock going down. So as the stock goes down, you're actually making money, because essentially options tell you that if you're right about the direction of the stock, you're going to make money, regardless if it's up, down, consolidation, so on and so forth. Does that answer your question, Michael?
It certainly does. Thank you.
No problem. Any other questions while we're answering Michael's? Cool. All right. Where was I? Oh yeah, talking about the candles. So again, just note if it's green, it builds its way from the bottom to the top. So it opens here, closes there. If it's red, opens here, closes there. These little sticks or wicks, since we're talking about candles, these are technically called shadows. This is just showing where the stock went for that day. So if you want to know what was the high of the day, low of the day, but it wasn't necessarily the open or close, that's what these wicks are going to be. Again, if you're getting into candle theory for your strategy later on, that's going to be important. But I just like to mention that. All right. Next thing. So let's talk about support and resistance. So when you're looking at these charts, you want to be able to identify a tradable range for the stock. So if you check the RSI is at 45. Ladarius said that the RSI between 45 and 55 pointing up is a thumbs up. It's not, again, it doesn't mean trade the stock, but it's a thumbs up to go look at the rest of the chart. So we're looking at the chart. Now we need to find a tradable range. What I like to do to find my tradable range is plot out my support and resistance. Support and resistance is pretty much just a line or a zone on your chart to where the stock will either reject or break through. This is going to help you identify your trader range. So currently the stock is at 532.99. We'll just call it 533. And we need to find a floor, right? We need to find a local bottom. We don't need to find the perfect bottom to where if everything falls apart, this is where the stock is going to land. No, you just need to find a local bottom. And right now, a local bottom is right here at about 529. We can call it 530, just around. The reason why I put my line at this point is because anytime you're setting support or resistance, you want to find a point to where the stock went and rejected 3 or more times, right? So if I zoom in here, we can see that along this price point where I set the line at about 529, 530, we can see that the stock was coming up, boom. It hits this price point and it starts to reject. We got a strong green candle hitting that line, boom. We got a rejection on the red candle. We got 3 green candles to break that line again. Nope, 2 more red candles down in the form of a rejection. Let me make it even bigger. All right, here we go. Green, rejection on red, 3 green, rejection on red, blood red to take us back down, green to come back up, another rejection. We came back up, another rejection, and then we finally broke through. So the fact that we just keep rejecting at this line tells us that around 529, 530, we can set support. And support, again, is going to be below the current stock price. So the current stock price is 533, support at 529. Support cannot be at 536. That is not support. That's going to be resistance. So if you're looking for resistance, and the difference between support and resistance is just that they're formed the exact same way. 3 touches and you can place your line. The thing about support is going to be below, resistance is going to be above. So if we want to pick a local resistance, we can actually put it right about here. And there are going to be many. I mean, you can also put one here in this area if you wanted to. But we'll just keep it simple. You can actually there's actually a few more, but you get the point. So when you set your support and resistance, again, this is your support, this is your resistance. This now gives you a tradable range to say, okay, if I'm closer to support, my RSI is at 45. So that means my RSI says that I'm not really overclocked until I get into that 60, 65, 70 range. So that means that if this decides to go up, I actually have space to make profit before it pegs out, right? This is good for options and for shares. So right now we're at 533. The ceiling for us is around 541, 542, we can say. And that gives us a point to say, do I want to take this trade? Is it worth it? Right. So this is your risk analysis that you can do. Is a real simple risk analysis is how close am I to support? Right. So I'm $3 away from support, but then to the upside, we almost have $10 to gain. Right. That's 542. This is 532. Right. So almost $10 to the upside versus $3 to the downside. That's a trade that I'll take. Right. This is again how I'm thinking if I'm trading from support to resistance. And then you also have this resistance. If you want to say, okay, well, if I jump into this trade at 533 and I take profit at 542, 541, where is my stop loss? Like what happens if it goes wrong? I always like to tell people, especially in the Discord, think about if it doesn't work. We always think about if the trade works, and we go with if the trade works in the most extreme case. You always want to have some kind of defense set up, and your defense, one level of defense could be a stop loss, right? So you can set your stop loss right here at 530 to be conservative. If not, you can set it a little bit lower at 525, which is the bottom of these candles. So the reason why I picked that 525 is because it's the next level of support. And how do I know? It's because right on that line, on that 525 line, we have the same amount or less. We have a little bit less, but we have 3 or more touches on that line of rejections before we break or make to the next side, right? So if I'm looking at it like this is how I'm setting my trade. My entry, I could enter on Monday if it either pulls back to 531, doesn't pull all the way back to 529, but if it pulls back to 531, the bottom of this candle set, or if it breaks above 535, I can go ahead and enter if I'm not already in. And then my stop loss, I can either set it at 520, 528, 529, or I can set it at 525 if I want to give the stock some breathing room. I know some people have jumped into stocks and they said, I had someone set a 1.5% stop loss. It was that tight. As soon as the stock moved back a little bit, they were kicked out of the trade. I don't recommend setting it that tight unless you're already in profit and you just want to get out, while the stock is running up. But this is how you can easily set up a swing trade. And again, there's a million ways to do it, a million ways to scramble an egg, but I think this is a real simple and easy way to set it up. You just trade from support to resistance, and you can set your stop loss either at support to be safe and super conservative, or you can stretch it down to the next level of support at 525. And then if you want to get even more space, you can set it at 520. If you're trading options, I wouldn't recommend setting your stop loss that far away because of time decay and all the other things that could play out. But if you're trading shares, you have a little bit more breathing room because you're not racing against the clock. Do I have any questions about support and resistance? Cool. All right, let's keep it moving. All right, next thing. Let's turn on the VRVP first. We always turn this one on last. All right. This tool on the left-hand side or right-hand side of my chart is the VRVP. Let me open my data window, hover over this. So this is the visible range volume profile. What does this stand for? Visible range just means the candles that are in range. So this tool is a volume-based indicator, and it gives you the volume for each price point. Normally, you will see people have volume as an indicator underneath their chart, but I like to have my volume set up like this because it tells me the volume at the different price points, and then it tells me the type of volume at the price points. So when you're looking at these different rectangles, these rectangles are called nodes. Each node is made up of up and down volume. Up volume is going to be buying volume, down is going to be selling volume. So for instance, when we look right here at this line at 540, what is this, 542, 543, you can see that for some reason we have a lot of volume right here, and we can tell by how far this is sticking out to the left. We can also tell by the choppiness at that level, right? There's a lot of chop at that level, and if we hover over the node, you can look right here. If you hover over that node, it's going to show you the up volume is at 37, the down volume is at 37 as well. So the up is almost 38. The down is right behind it at 37 for a total of 75 million when it comes to volume at that price point. So this is telling you that if we go back, if the stock surges, right? Let's say tomorrow the spot opens up and it pops, it blows past that 535 and it's going up. Once we hit around 541, 542, 543 area, expect some chop and a possible rejection. Why? Because we haven't made up our mind right here. There's a lot of buys and sells, right? Again, it's 37 for 37. So the bulls and bears are fighting it out right here. And this could be a good point to take profit, especially if you got in at 532 or less, right? You got in early, you've been in since last week, you're looking for exit, it goes up, boom, you hit this price point, you can go ahead and hop out. So that's why I really like the VRVP versus a normal volume indicator. And again, VRVP stands for visible range volume profile. So it's visually showing you the volume per price profile. If you scrunch it up, give it a second, it's going to adjust. Right. So now it's adjusting based on, again, it's taking in what's visible. So we add in more candles. We added in more candles over here in the left-hand side. The indicator adjusted to show us, okay, let me give you even more volume based on the data that's packed into the candles to display the buys and sales on this side. So what you'll notice, let me move it a little bit more. What you'll notice here is that in the spaces where you have a lot of sideways trading, you'll see that we have a lot of volume just sitting there, right? A lot of volume on the sideways trades, on the choppiness. And then when you get into the gaps, like we have a gap in this area, you can also see the volume drops off in those areas. And then it picks back up to where we have a cluster of candles. So again, the VRVP is extremely helpful in the fact that it can adjust regardless of whatever time frame you're looking at, daily, weekly, monthly, 4 hour, 5 minute, 1 minute. It adjusts based on what you're looking at. Also, if you're looking at these nodes and you're wondering, okay, where's the most volume at? The most volume is going to be along this red line. That red line is called the POC. That's the point of control. That's just to help you identify the place where the most volume is at per the candles that you have in the visible range, right? So if I reset my chart, or I don't know how I reset it. Let me slide it over some like that. You can see the POC is right here at about 516 per the candles that I have in. So really strong tool to use. It's good to also back this up with your support and resistance. You can see before I even turned this on, we had resistance set here, and it's right below we run into that level. So if this was your exit for the trade that I was setting up, this would be good because we know once you hit this, there's going to be a fight. There's a fight waiting right here as far as volume. Buys and sales are just sitting. So running into this could be a wall. You could take profit before you get there. But on the way up, if we hover over these nodes, we can see that the node that we're on, again, checking this window right here, the node that we're on, we got 13 million up versus 5 million down, right? So the bulls are winning right here. We got 13 million volume worth of buys pretty much and 5 million worth of sales. The next level where it's going to get a little tricky, we got 5 million down and 2.8 million up. The next level, you got 19 and you got 6. So it starts to get tougher and tougher as you reach up to this price point. I said, yeah, at this price point to where we got the largest node other than the POC. So that's a good way to use the VRVP when first starting out. And again, on lower time frames, it works extremely well if you're looking for exits. I've used this plenty of times to figure out like how to get out of a stock or how to get in. But it just takes some time because the VRVP is a fairly new indicator and is extremely flexible when you're changing like different time frames. So do I have any questions about the VRVP? Cool. I take silence as a nope, we're good. All right. Next indicator, last indicator for the main chart. This is the MA ribbon. So the MA ribbon is just a ribbon of moving averages, right? So MA stands for moving average. Moving average is just the average stock price over any given period of time. For this setup that we're looking at, we're using SMAs. You can also change this to EMAs and all the other different MAs if you want to. And then you can also set the time. So since we're on the daily chart, this is a 20-day moving average, 50-day, 100-day, 200-day. You can change the moving averages to whatever you would like. Sometimes I get questions on, why don't I use 18? Why don't I use a 21? Why don't I use a 27? I think the moving averages just work based on the individual. I won't say that there's a perfect moving average because it just depends on how you like to trade. Some people love EMAs over SMAs because they're front loaded. But I just feel like it depends on the type of trade that you're looking at. I would definitely look at EMAs more if I'm looking at lower time frames, and also if I'm trading options to, beat the clock when it comes to time decay. But looking at the SMAs that I have here, again, we have them color coded. So the golden line, it's going to be 20, orange 50, burnt orange 100, hot red is 200. All right. So when looking at these moving averages, you can see that we have them streaming through the chart. So what I like to do is pay attention to the yellow line. I know it's a lot to look at. I know 4 moving averages could be a lot. You really don't have to use 4. You could use the 20 and the 50. Again, when I first started out, I was using the 50 and the 200, but that took forever to make trades. Like I would be in a trade for like 2 months because I would be looking at the 50 and the 200 and waiting for them to cross or give me a signal that the stock is going to go up or go down. So that's when I incorporated the 20 and the 100. And now I'm getting quicker signals because of that, solely because of the 20. So when you look at all of this, the main line to pay attention to is that 20 line, that 20-day moving average. So the 20-day moving average is the one that's in yellow. And what you normally want is these moving averages stacked in chronological order from least to greatest. So if we go back into this area, you can see where we have 20, 50, 100, 200 all stacked in chronological order. And then you can easily see how the candles are just bouncing off of that 20 as it climbs up and it runs into resistance. Now, once the candles are out of order, you want to be careful because this 20 going underneath that 50 could say that, hey, we're going to be going down for a second if the 20 doesn't correct, right? So you can see that we have a dip in this area. We also had the start of a dip right here, but these candles from below the 20 and 50 broke both of them, bringing the 20 back up. So I'm saying that to say that when you have your moving averages out of whack, so for instance, we got the 20 touching the 50 right now. If the 20 goes underneath the 50, you want to be careful because we could continue down. If these candles, we need these candles to get back above the 20 and 50 themselves. That way it's going to bend the moving averages back to the upside, and then we can get it back in chronological order to where it's extremely easy to trade when you have your moving averages stacked in this way. Now, this is the SPY we're talking about. So the SPY is going to always have a pretty chart, but it may be some stocks you look at where, you can't get a clean stack like this, and it may be flipped upside down. The key thing that I would say is just pay attention to the 20. If the 20 has crossed all of your other moving averages, so if your 20-day moving average is below like the 200, that means that 20 is going to act as a resistance and keep pushing the stock lower and lower and lower until the stock actually breaks the 200, the 100, and then starts to drag that 20 back up with it. We don't have that to show right now because, again, the SPY is doing great. But that's one thing that I like to note when I'm looking at the moving averages. Again, I would like to have them stacked in chronological order from least to greatest. Right now we have that, but it looks like that 20 is probably going to cross that 50. It's pretty much going to cross that 50 tomorrow, and then we're going to see if we can get above that 20 and 50 with a green candle to see if we can take it back higher to where we can get that 20 back on top of the 50. And then that way, the only thing we need to pay attention to is the 20. I know I've said a lot, but again, if you want to make this even simpler, just take off the 100 and the 200. You can do that, right? So if you take off the 100 and 200, you have 2 MAs to worry about. The only reason I don't like doing this is because I can't reference my 100 and 200. I need to know. I like to check the 200-day moving average as a worst case scenario. But in this situation, what you want to pay attention to is if the 20 goes underneath the 50, watch out. It could drop lower. This is kind of an indication that the stock could be going lower. And again, what you will want to see is some green candles back above the 20 and then back above the 50. If you can get the green candles back above the 20 and 50 while the 20 is underneath the 50, you should be good because that's bringing the 20 back up. I know it's a lot of conditions, but that's how the moving averages work. And what I like to do is if my moving averages aren't working, I don't force the trade. Just find another stock. There's thousands of stocks. You don't have to trade any given stock. You can always pick a different one. If the chart setup is too complex for you, just move to a simpler stock. There's always a trade to find. You just got to get good at finding them. Do I have any questions about anything on this chart thus far? Let me drink the water. Cool. Let's keep it moving. All right. Next thing, the MACD. All right. So the MACD, top left-hand corner, is going to tell us what we're looking at. The MACD is the moving average convergence divergence. Really simple indicator. This is your trend indicator. If you want to know how the stock is trending, not based, just solely based on the candle setup, you can look at the MACD. So you have two lines, and then you also have the histogram. I'll explain the histogram in a second, but you have these two lines here. You have a red and a blue line. The red line represents selling pressure. So the way that the MACD works is that whatever line is on top, on the farthest right-hand side of your screen, that's going to be the dominant pressure being applied to the stock. So you can see that we have this red starting here, and it goes all the way down. So we have red all the way down here, and it's still on top. We have blue below it, and it's curving up a little bit. But the MACD is telling us that we're in a sell trend. Why? Because the selling pressure is being applied to the stock, and it's been applied to the stock for a while. And we all know, if we've been trading in the market over the last 2 or 3 weeks, the SPY has been red for that same time span. So the MACD, what you want to pay attention to is when this blue line starts to curve up, and then when they trade places. So when these two lines converge or cross over, you have something called a MACD crossover. When the MACD crossover happens, that's signifying that the current trend is over and a new trend is starting. So the current trend is a downtrend. When you have this blue line cross the red line to the upside, that means that we're going to now be in a buy trend. That means that the buying pressure is mainly being applied to the stock. The stock should be moving up. So if you have a hard time looking at these lines and figuring out, okay, I don't know which one is on top, I can't really see it, it's blending in with this chart, just pay attention to the histogram. The histogram is the chart that's behind the lines. And if it's red, that means that the selling pressure is being applied. If it's green, that means that the buying pressure is being applied. Now, if you zoom in, you can see that we have some deep red bars, and then we have some light powder, pink bars. When you have that light powder pink, that means that it is softening to the opposite side. That's also true when you have the powder green. That means it's softening to the opposite side. So for in this area, we had the deep green, which means that the strength of the buying pressure was increasing in intensity. And then in this area, you can see that we have this powder green happening and the bars are getting shorter. That means that we're losing intensity and we're going to the sell side. So now we can see that we have some powder pink, and that means we're losing intensity to the sell side, and we could be crossing back over to the buy side. We just need to continue the trend of having these pink bars print on the MACD, and then we can be crossing over to the opposite side for a move when the buying pressure is being applied. Do I have any questions about the MACD? Again, real simple indicator, and it works extremely well on lower time frames, especially for people that are trading options. Cool. Last indicator, the stock or stoke, depending on how you pronounce it, RSI. So top left-hand corner, this is the stochastics RSI. So this RSI is pretty much a momentum indicator. It also ties in with your normal RSI. The difference with this RSI is that, one, it ranges from 20. We see bottom line is 20, top line is 80, and it also likes to over rev. So this, what I mean by over rev is that top line is 80, but this frequents 100. It also frequents 0. So if I scrunch the chart up, you can see we've touched 100 a million times, and then we also have touched 0 a million times. The thing about this chart is that once it goes to 0, it's not it's over, woe is me. It's pretty much like a coiled spring being tightened and flattened and getting ready to spring out, pretty much. So for instance, we had the stochastics RSI hit a low of 0 around in this area. It went up to about 12 and kind of danced around before breaking 20 for the last time, and then it shot up to 39. So Another thing is that this indicator is really sensitive. So if the stock moves up, let's say 2 days in a row, this stochastic on the daily can go from 39 to 65, 70 just in 2 days. Your normal RSI is not going to move that fast. So this RSI could shoot all the way up to 100, and your normal RSI could be at 60, right? So again, this one is just showing how much energy and momentum your next move is going to have. So this is actually good. If we're looking at, if the stock that we're looking at, again, is at 533, and we think that it's going to 542, having a low stochastics that's actually climbing is good, because I'm looking at it at, hey, we're at 40 on the stochastics. We can go all the way up to 100. If we shoot all the way up to 100, that should put us right where we need to be, around 540, 541, to go ahead and exit that trade. So when you look at these stochastics on the different time frames, it's going to vary, because again, it's telling you how much punch you're going to have in each move. And I like to look at it as a momentum indicator. If this decides to go up, how much energy do we have to go up versus how much energy do we have if it decides to pull back? If it decides to pull back, we're going from 40 down to 20 down to 0, right? But to the upside, we have 60 points to grab to the upside before we smack into 100. And we want this stock to go up anyway, because we needed to get back above its 50 and 20 day moving average. Any questions? Let me see. I got a question in the chat. The SPY may be in a 1 or 3 moves down, aka 3 strikes to the bottom. It's possible. It's possible. All right. I've talked for long enough. I'm going to go ahead and pass it over to Mark. If y'all have any stocks that y'all want us to look at, any news related to any stocks that y'all want us to look at, go ahead and put them in the chat. Mark, if you can give me a few seconds, I have some from Ty. I think she got about 3 of them. She wanted me to put them in here. You go ahead and chart them out, and then she'll just watch the recording on YouTube later. But give me a few seconds, Mark. But yeah, if y'all have any questions about any stocks, yep, I can see Ross is already adding them to the chat. But yeah, y'all can go ahead and add them to the chat, and I'll go ahead and pass it over to you, Mark.
Appreciate it, Ladarius. All right, so let me share my screen in 1 second. Share, perfect. CrowdStrike Holdings. Okay, so let's take a look at CrowdStrike. We'll start off with the weekly, see what's happening on the weekly, and then from there we'll move to the daily to see how it's going to be looking for the next week coming up. So looking at the weekly, I already see that it looks like we're testing support. So we had 4 days of, or 4 weeks, excuse me, of cool down, and it's been cooling down, coming back to about 205, and it's looking like it's testing this bottom. It got really close to this 200 week moving average and 100 week moving average, and you can see it's rejecting it. And then we have a green candlestick. This green candlestick could be letting us know that CrowdStrike is reaching its bottom for the moment, and it could be starting to become move upwards in direction. So let me draw some support. So we have support here at about 200. You can call support at about 200. If it was to break below this support level, the next place is going to go and test. It's going to be really strong. We can see we'll have a test here at about 180 will be our next test level. So if it can break below this 200, we'll be seeing it try to get to about 180. Looking at the other indicators, excuse me, we see we have the RSI level. It's just a little bit outside of our sweet spot, but it is pointing upwards. So that's giving us bullish momentum potentially, showing us that this could be bullish, could start to turn around from here. What I like about this chart is that we see the stochastic RSI levels in that over soul region, and it's starting to point upwards. So we could start to, again, see this stock potentially start to turn around, especially because we have this rejection that's happening on the moving averages. Now, if it was to continue to go up, the next place is going to go and try to test on for the next few weeks, it's gonna try to come and test this 274 range. And why do I say 274? Well, for me personally, and all of the technical analysis that I've done, I see that moving averages are always treated as support or resistance line. So if you see a stock moving towards a moving average, you can 9 times out of 10 say that that stock is going to go and test that moving average. And the next moving average is going to test is this 50-week, which is sitting at about 274. So we can draw a resistance at about 274. So that's my next resistance area that I have. If it was to break above that, it's just going to go and try to test this 20-week moving average, which by that time, it'll probably be sitting at about 315 maybe. Again, this may take a few weeks to happen, but that's where it could potentially be getting to. But for right now, we'll call them our next move up is going to be this 220 range. Again, the more weeks it takes, the more weeks that the stock price is below these moving averages, the closer is the lower these moving averages are going to become. Now, as far as for this week, let's see what's happening. See if we can see anything. All right. So for this week, looks like stochastic RSI level is high. However, we did just have a crossover to the upside. So we could be seeing this move up. We could be seeing this try to get back to this 270 range for this week. So if it opens up green Monday, we could potentially be seeing this move up to the to this 270 range. What I do see, it looks like it's creating. We could see a little pullback, but that's just because this could be creating a head and shoulders. So we have a lot of movement here in this area. The stock price, while these stocks were going down, they were making higher highs each opening, or they were going higher each opening. Stock price testing this bottom at 200, rejected 200, started to trend upwards. So we see we're moving. I'm thinking we're probably going to see it move up to about what did that? We're going to probably see it move up to this range we have here at 270, and then see a little pullback to create this second shoulder of our head and shoulders pattern. And then if that happens, we'll start to see this go upwards. It's going to now. That's going to take probably a few weeks to completely form. So what I'm looking for is Monday. Is it going to be green? If it's green, and this is get close to testing this 270 range, I want to see what happens at that point. Can it break above 270? Because if it can break above 270, then we'll be seeing it potentially get to this 200-day moving average, the red line, which is sitting at about almost $300. So it's at at 290. I don't know why I thought that was 299, but it's sitting at about 290. So if it breaks above 270, we could be seeing this get to 290. Now, if it was to reject that, just be a little bit careful. If it was to reject that area, we could be seeing it try to come back to 250. And if it breaks below that, we could be seeing this try to come back. I won't say all the way back down to 200, but we may see it try to get back to 230 if it was to reject this 270 range. So just be on the lookout for that. Again, it does look like from the indicators that we may see it become bullish and it reach this 270 range first. And we're gonna have to wait for Monday. So when the market opens, let's see how it's looking. And if it hits 270, then you can start to reanalyze this trade and see if you can find a potential entry point. Does that help with CrowdStrike? Do you have any questions on it? I think that was Ross, right? Yeah. Take Solomons as a no. So let's look at TQQQ. All right. So looking at the weekly for pro shares, it looks like it's trying to test this 200-day moving average. Again, that's going to be support level on the weekly chart. That's our support. It's going to be at $46.34, so about $45. If it was to break below that, And I'm going to treat this moving average that we have here as my next line of support. So if it breaks below 46, we could be seeing this get to 40. If it breaks below 46 and it gets to 40, I'm looking to see, can it reject that 40 price and start to trend upwards? If it was to reject that 40 price, then we're going to start to see it try to break back up to the upside. And it's going to try to break this moving average. If it breaks this moving average at about $45, then we could be seeing this get to 53. Now, it's currently above this 53 range, right? So our next line of support is going to, or excuse me, our resistance level, if it was to continue to go up, it's going to be here at about 65. So if it was to trend upwards, we could be seeing this get to 65. So your range right now that you could be trading, your range zones could be from 54 if you're trying to do puts, or it could be 50, it could be 65. It just depends on which way it's going to go for the week. And then let's check the daily. Okay. So the daily, what I'm seeing right now is that it's rejecting this 200-day moving average. So if we was to open up green, for me, I'm saying, okay, if it opens up green, this is going to go to $65. And I'm having a lot of bullish indicators that it can go above that as well. So if it was to be green, we're going to see this MACD where our buying pressure, the blue line, is going to get closer to our selling pressure, the red line, and it's going to be trying to cross over to the upside. That's a bullish indicator. We have a rejection on the moving average right now. Then we have stochastic at a very low spot. So that stochastic being that low, we know it needs to get back to that overbought range. And with that, that's a bullish momentum because people are buying the stock. So that's going to rise the price up as well. And then the RSI level is just a little bit outside that sweet zone. It is pointing upwards at 41 right now. But by the time this opens up green, that 41 would probably be closer to the 45, 55 sweet spot that we have. And with that, we're going to be seeing it get to this 65 range. So if it opens up green and it's looking like you can get into a trade, I'll be looking for my target prices to be around $65. That's where I'm looking to hit. And then at that point, once I hit that, I'll get out those trades and then reevaluate the trade to see what happens. If it was to break above 64, then the next place we're going to be seeing it get to is 70, because that's our next moving averages. Our moving averages are really close to one another. Does that help with pro shares, Ross? How would you play options on crowd? Yeah, so let's go back to crowd really quick. All right, so if I was to be looking to play an option on crowd, again, I'm going to first wait. Market opens obviously Monday. You got to wait till the market opens. If it's opening up green, I'm going to reevaluate the smaller time frame just to see if I can confirm that it is going to be in the uptrend. And if it is on the uptrend, I'm looking for prices. I'm looking for 270 strike prices. I might even make it lower. So instead of doing 270, I'll probably do it at about 255, 260 as my strike price. But I know that my target price in my head is going to be 270. If it reaches 270, I'm going to make more profit. If it doesn't, since I have a lower strike zone, I'm going to still be able to secure profit with that. So I'll be looking at 255, 260s for my strike price. And for me personally, even if I'm doing day trades, I just like to give myself a lot of time. So I'll probably give myself like 3 or 4 weeks on the trade just to have some wiggle room, and that time decay is not being eaten up so quickly. So that's what I'll be looking at for this. And if it's going to go down, I'm not going to even try to play or put on it. What I'll do is, if it's red, I'm waiting for it to get down to this 200 range, and I want to see what happens there. If it gets to 200 and is rejecting that price, so if it breaks under this resistance we have at 230, and I see it's getting to 200, I'm then waiting for it to reject it. And if it rejects that price, I can then get into strike prices at about 230. So I can do 215, 220 as my strike price and have a target price in my head of 230. Does that make sense? That's just the way that I would play it. Because I know crowd currently has been going down, and then it caught this bottom, and it's up like what, I think like 4 or 5% on the week for last week, if I'm not mistaken. Yeah, well, 7. Oh, I'm looking at the wrong. Oh, it was up 10% last week. So yeah, Ross, let me know if you have any more questions on crowd. I want to see, Yvonne, you raised your hand.
Yeah, Mark, I know LJ went through this and I'm still a little bit confused. When you're buying an option and like let's say you buy one out of the money, if it goes down and you lose on it, and they say it goes to whatever 0 or you take a stop loss on it. But if you're buying an option in the money, how does that save you? And what happens if you're like day trading and it expires? Can you explain that with the in the money options?
Yeah, so in the money options, it'll just the losses you take, it'll be a little bit slower because it's in the money. So let's say the stock price is at you let's say you think this price is going to go to 270 and the current price is at 250. Well, if you get a strike price that's in the money, let's say you get it at 245 and it goes down, because you're still close to that to the original price. Let's say it goes down from 250 to 248, because you're still in the money, you're not going to lose as much money because it still has some type of value. But in regards to the or in correlation with the 270 strike price. I'm not sure if that's making sense. If I need to try to clarify it more.
Okay.
Does it make sense?
I mean, I guess what you're saying, if you got, say, 270 was one out of the money,
Mhm.
and it's just going to be a slower time of decay.
Yeah,
Is that
correct.
all
Because
you're
it's
saying? It just decays slower?
Yes, correct. So the intrinsic value on it is going to be still wanted by other buyers because it's still in the money. Even though it went down, it's still in the money. In regards to the 270, because the prices has went down and that 270 is looking less and less likely to hit, is going to lose its intrinsic value. Buyers may not want that as much, but you still have a chance of buyers wanting that 245 strike price.
What happens if you're day trading an asset and it is in the money and it expires that day in the money? What happens?
So I have never had that issue happen. I'm not sure what happens, but I'm pretty sure if it's going to expire that day, you're more than likely is going to wherever that value is, you're going to have to cash it out at that value, and that's what you're going to get back.
Yeah, I can speak to it real quick, Mark. Yeah, so if you held something that was in the money at expiration, one, depending on your brokerage, it's going to auto like force you to sell. I think it's like a 15 to 30-minute window, depending on the brokerage settings. It will force you to sell, and if you're already in profit, or not in profit, but if it still has value, it's going to force you to sell at whatever value it is. Now, if there isn't any value, it goes all the way down to, I don't know, $1 or $5, then it's just going to sell at 0 pretty much.
Okay, yeah. And the reason I was asking is because a friend of mine was trading and they were in the SPY and they were in the money and something happened and they had to deal with it, and the end of the trading day ended, but it was in the money. But I think she got paid from her broker, and it was holding some value, but I'm not sure if she did or not.
Yeah, and so whatever value is left, normally you're walking away with it. Now, the broker paying you, it depends. I guess it depends on the broker. They can all act the way they want to pretty much. But normally what I've seen is that if you have an option contract and it's in the money and is going into expiration and there's still value, you get that value.
Yeah.
Yeah.
Okay. That's what I want to know.
All right. All right. So this one, this is on the weekly chart. Just had a crossover on that at MACD. On the MACD, we can see that buying pressure is above the selling pressure. This could still have more room to increase. At this point, this is all-time highs for this stock as 265. Once a stock gets into all-time highs, I like to start to treat it in $5 increments. Because we have no ceiling, I just like to use $5 increments because that's, for the most part, is where people are going to be putting stop losses. So if we was to see this continue to go up, we could be seeing this get back to like 270. For me, again, I haven't done any research on this stock, so I wouldn't necessarily say to get in at this point. I know we are in a war, so I can see that the aerospace, this elections, and I know that the aerospace and military is a lot of times defense stocks, goes up during elections and wars. So this candlestick probably was for earnings, maybe, but also with this could be a bullish flag that's being formed. And at this point, we have this flagpole, so we could be seeing some type of cool down. Eventually, the stock will have to cool down. If it was to cool down, I can see it coming back to about 230, just because we can see we have some areas in here where this was the resistance line for the previous trading periods. This was the resistance line, so this could be pulling back and creating that bullish flag. And then at that point, we could be seeing it break back out. I would just be a little bit careful because, again, this is all-time highs, and I know a lot of times when stocks hit that all-time highs, we got to see some type of cool down. This is showing bullish on the weekly, so it could continue to go up, but that could take multiple weeks for it to continue to rise. If we look at the daily chart, that can give us an indication of what's going to happen this week. So the daily chart, stochastic RSI level is high. The RSI level is also high in the oversold, hitting 70. It's starting to look like it's cooling down. And then from this, we can see that it created that flagpole. And the last day of trading, we can see it started red. So we could be seeing this pull down. And again, if it was to pull down, we could be seeing it get back to 230. Before it touches that on the daily, though, it may try to treat these opening and closes prices as a support line. So we could see a potential support area at about 350. So about $15 from its current price. And again, from there, I'm just looking to see what's happening. So if it breaks below 250, we could be seeing this get back to 230. And then at 230 is where I'll start to be like, okay, I'm looking for an entry point if I see a rejection on that line, just because I know I have the potential bullish flag forming. And if it was to break below this, we're just going to be going down to this 20-day moving average, which is sitting at about 315 right now. And it hit off of earnings. So they had earnings, they beat their earnings numbers, and then that's what caused the stock to price. Probably the outlook was a good outlook. They hit their numbers, so we seen that increase. So just be prepared for a little cool down on this. You may have missed the boat on it. It's okay. I don't tell people to play earnings because it's 50-50. So just wait for it to cool back and see if you can find a good spot to get in to maybe do some shares. If you already have shares, you may want to shave profits off just because this could be the top of it, and we could be seeing this come down a little bit. All right. So let me get AMD MU coin. I'm gonna grab one. So AMD advanced micro devices. We've charted this one quite often. Okay, so AMD is currently testing this. We can see on the weekly chart, testing these moving averages. It looks like it's rejecting these moving averages. And then from this rejection, we're seeing it trying to test this resistance. Can it break above this resistance? If it breaks above this resistance, then we could be seeing this get back to 155. I wouldn't even worry about the 50-day moving average, because if it breaks above that resistance, at that point, that 50-week moving average, is going to be lower, and it's going to be closer to our resistance we have drawn at 140. So if it was to break above 140, we could be seeing this get back to about 154, 155. Now, if it was to break below if it was to break below these support lines, our next support area, is going to be this moving average we have here, is at about 117. And if it was to break below that, our next moving average, this red line, our 200-week moving average is going to be closer to 100. So we could potentially be seeing it try to get to 100 and then start to reject from here. It's looking like it's trying to catch its bottom. This is a nice little area for support. Is really close to this moving average. And we can see, if we look previously, we can see we have multiple testing in this area. So if it was to reject this area, I'm thinking it's going to come and try to test this 130 first, break above that, and then hit this 154. So if it breaks above this 140 range, we're going to be seeing it get to 155. If it rejects this 140 range, we're going to see it try to get to 115. And that's on the weekly. If we look at the daily, it looks like it was testing that moving average, is rejecting it, and we're getting really close to it, trying to break out to the upside. Just be a little bit careful because we do have some bearish indicators where our moving averages are starting to cross underneath our 200-day moving average, and that's known as like the death cross. Anytime the 50-day moving average cross below the 200-day moving average, we could be seeing this continue to trend down. The other indicators, though, the stochastic RSI level is pointing upwards, and it's trying to get back to this overbought region, and we're really close to a MACD crossover to the upside. So this one is 50-50. We just got to wait to see what happens on Monday. So when the market opens, can we break above 140? If we can break above this 140 range, or let's even throw away the 140, can we break above this 20 moving average? If we can break above this 20-day moving average, we're going to start to try to climb back to this 200-day moving average, which is currently sitting at 154. So we can see it break above this moving average, we're going to be seeing it try to get to 124. If we see it pull back, we could be seeing this, or if it rejects this moving average, we could be seeing this try to continue to cool down a little bit more and establish that support line. And if we're going to establish a support line on the daily, our first support would be in this area right here at about 130. That's a nice little support area to have. So if we was to break below that, then we're going to be seeing to get back to this 118, 120 range. And that's what I'm seeing on this one. So I'm just waiting. Can it break above our 20-day moving average? If it breaks above 20-day moving average, and I can pull this up. If it can break above that 20-day moving average, again, 155. If it was to reject that moving average, we could be seeing it continue to try to test this support and establish it as its bottom. And if it breaks below that, it's going to 120. Okay, MU. All right, so MU currently is testing this 50-week moving average. It's right, it broke underneath it, and I was trying to come back and see if it can break above it. If it doesn't break above it, we could be seeing this continue to trend downwards. And if it was to trend from its current price at 92, we're going to see it first try to test this 87 range, 88, 87 range as its support. If it breaks below that, it's going to be coming to try to test these two moving averages we have here, which are sitting at about $78. And if it was to break above our moving average, if it was to break above our 50, we're going to be seeing it try to get to this 105 range. So because the 50, again, is so close to my first resistance, I can just pull this down a little bit, call that my support line. And if it was to break above, call this my resistance area. If it was to break above 97, we're going to be seeing it get to 106. And that's on the weekly. So we was to look at the daily. On the daily, it looks like it was testing this bottom. If it was to continue to go up, we're going to try to see it test this 200 and this 20-day moving average at the same time. The 20-day is getting really close to crossing underneath the 200-day moving average. So we will need to see this stock price break above this 200-day moving average before we can confirm that it's going to go up in value. This could be potentially making a little U shape up, or it could be a double bottom. But we just will have to see, or bearish flag. We just need to see it break above our resistance. Once it breaks above our resistance, that we can confirm that it's going to stay up there, it's going to be in the uptrend. If it was to reject it, we're going to see it come back down and try to test 87. And then at that point, I'm looking to see what's going to happen. If it rejects this 87 range, then I'll feel comfortable getting into some calls or some swing trades at that point, because I know that this is potentially the bottom. Any questions about Micron technology? I'll check the chat. Okay. So we have time. I'm going to go over Yvonne's 2 stocks, and then if we have time afterwards, I'll go over the other ones as well. Just for the sake of time, because it's 7:25 now. Let's check out General Dynamics. Okay. All right, so this is on the weekly. It's currently creating all-time highs. It's testing that all-time high, the highest ceiling it has. So we have resistance at about $299, $300 is going to be our resistance level. And we can see here it's been testing this area and rejecting it quite often. And it's currently also testing the 200-week moving average. One good thing about this is that you can see we have our moving averages in numerical order. We have 20-week, 50-week, 100-week, 200-week. When you see that happens, that means that this 20-week moving average is a strong line. So when it tests this area, a lot of times you're going to see that bounce happen. So we could have a bounce, and this could break us back to the upside. Now, how far we're going to go, I'm not sure, because we don't have enough information. But again, I would treat it as $5 increments. So if it breaks above 300, the next place I can see it going is going to be that 305. And then at 305, we may see some rejection at that point. If it was to break below, if it was to break below this 200-week moving average, our next place of support, we see we have some strong support here. So if it was to reject this 200-day moving average, 20-week moving average, we're going to be seeing it try to get back to 280. If it was to break below 280, next place is going to be this 50-week moving average, which is sitting here at about 267, 270. So you can just have a $10 decrease in value from here as well. If we look at the daily chart, it's looking like we're having a rejection on the moving average, or excuse me, on the chart, we're having a rejection on our moving average, 20-day moving average. Price is rejecting it. So we could see this try to get back to this 300 range. If it gets back to 300, can we break above it? If we break above it, again, 305 is going to be my next place where I'm looking to take profits, or I'm looking to use as my strike price for call options. Looking at the other indicators, RSI level is in that sweet spot pointing upwards. It's at 52 pointing upwards. Stochastic has just finished, just exited the oversold region and is pointing upwards. And then we have that crossover on the MACD is really small. It just had the crossover. So with this, we could see a little pop that can get us to that 300 and potentially get us to that 305 range. So let's just wait to see what happens on. Let's just wait to see what happens on Monday with it. So we'll just have to wait for Monday to see what happens, and then we'll be able to reanalyze this stock. So again, if it opens up green, we're going to be seeing it get to 300. Can it break above that? If it breaks above that, 305 is the next spot that it's going to go and test. If it rejects this, if it rejects 300, it's going to come back to these moving averages. And if it opens up below this, we're going to be seeing it get to 280. And then from 280, can it reject 280 and trend upwards? If it was to reject 280 and trend upwards, we're going to be seeing it get back to these moving averages, which would be about 290. So 290 would be the next place if it was to reject this 280 range. Does that help? Have any questions on that one?
That's great. Thank you.
Mm-hmm. All right. I think the other one was Boeing, if I'm not mistaken. Check out Boeing. All right. Boeing. Boeing's currently testing support at 160. From what I'm seeing, it's looking like we may continue to see this cool down. We have these moving averages crossing underneath the 200-week moving average. Stochastic RSI level is in that neutral zone, but it is pointing downwards, and it's coming from that overbought region. So we could be seeing this cooling down. If it was to continue to pull back and break underneath this 160 range, the next place that is going to go and test, it's going to be about right here. And that's 146. Again, we have area of in support where we have testing in this area, and even right here as well. So that's a nice little support line to have as well. So if it breaks under 160, we could be seeing this get to about 145. On the weekly charts, I'm seeing a lot of bearish indicators. Again, RSI level is low, it's in the pointing downwards. Stochastic is also pointing downwards, and it looks like it's trying to get back to that oversold region. And we're really close to a MACD crossover to the downside. So if you're looking for an entry point, I would just wait a little bit longer just to see if we can establish our bottom. We can establish 160 as our floor. Then where we will be seeing this go to is the next place. It's going to be coming right back to about 180. It's going to be the next place that I'm going to be seeing this at. So if it's rejecting and we can establish this as our floor, our ceiling is going to be 180. And if it breaks above 180, the next place is going to go and test. It's sitting here at about $198, $200, which is going to be these moving averages we have here. And that's on the weekly. If we look at the daily to see if it's going to continue to go down. Okay, so again, floor is at 167. We're sitting right in the middle of it. Stochastic is low and it's starting to point upwards. And that MACD buying pressure is underneath the selling pressure. So I would just be a little bit careful just to wait to see. If it opens up green, we could be seeing it get for the week to 178. But I will wait until Monday and then reanalyze it. Once Monday happens, let's look at some lower time frames to see which way is potentially going, and then that can we can use that information to determine if on the daily chart it's going to continue to go up or if it's going to try to pull back down to this 162. So I'll just be on the lookout for this one. 9:30, I'll put this on my watch list and just pay attention to it and then give you an update of what I see once the market opens up, because it's kind of hard to determine this one at this point. Any questions on this one? All right, so I'm going to pass it back off to Ladarius. And again, if we have more time, I can go over the other ones afterwards. Thank you.
Cool. I appreciate that. Let me go ahead and get my screen up and going. I got about 4 for us, and the rest I'll just post in the Discord. Also, if you're in this call, what I'll do is offer give me 1 second, get this going. So what I'll do at the end of this call is offer a free month for anyone that signs up in this call to the Discord. Again, if you want to see what the Discord offers, just stay a little bit afterwards and we can take a look at that. But let me go ahead and break down these charts because we're after 7:30. All right, cool. So I'll mention more about the Discord later on. But all right, first thing I want to look at is PANW, Palo Alto Networks. Pull it back some. So Palo Alto Networks. Oh, fix my MA ribbon. Boom, boom. All right, Palo Alto Networks is in the cybersecurity space. I know that we've all been hearing about CrowdStrike. I know Mark charted out CrowdStrike earlier. Palo Alto also has earnings coming up on the 19th, and it looks like it could be going back up to the 340s. And if it breaks 340s, we could see it peak at about 350 before earnings. The reason why I'm saying this is because when I look at the chart is pretty decent on the daily. We can see that the RSI is at 56. It's pointing up. All right, so I like 45 to 55 pointing up. 56 is a point off. That's fine. We can also look at the MACD to see that the MACD is extremely close to crossing back over to that buy side, which is good. Reset my chart, and then we check the stochastics. The stochastics is at about 67 out of 100. So when the stochastics is at 67, my first target would be 80. And then the next target would be 100. So I like to look at this in increments of 20, 0, 20, and then it gets kind of fuzzy when you get to 50. But anything out of other than testing at 50, I like to go in increments of 20. So 0 to 20, and then you go here to 50, here to 80, and then 80 to 20. So again, outside of the blue, we count the 20. So the next level at 67 that we're trying to target is 80. After 80, we're looking at 100. If this goes up to 100 on the stochastics, of course, we'll get that MACD crossover, and then we'll be testing. We should be testing around 340 to 345 to the upside. Also, what I would like to do is check the week. Look at the week, we can see that we've been getting some reduced pressure on the stochastics. Has been cooling off just a bit. We also see that the buying pressure and selling pressure were tangled up. This is where the histogram comes in at, right? When you have a situation like this, what is happening? Well, we went to the sell side slightly, and then we're coming right back up to the buy side. So if this pops to the upside, this is going to cross us back over to the buy side, even on the weekly. So we'll have a synchronous move from the daily and weekly as far as the MACD crossover, which means that, again, this thing could explode. Also, looking at the weekly, we do have some space. We're at about 35 out of 100 to the upside. And then we look at the RSI. The RSI is about 56. So the day and week chart, really not that far off. You see 56 on the day for the RSI, and then you go to the week, you see 56. And then we're having a pending MACD crossover on the weekly, and then we have a pending MACD crossover on the daily. So Palo Alto Networks has been moving ever since it pulled back down to about 284. It's been climbing back up. And it looks like it's going to run going into earnings. Again, I think that the downswing of CrowdStrike is actually adding into the upward pressure of Palo Alto Networks, and the new deals or the new things that they can talk about from the fallout of CrowdStrike. So people are buying it up. We can tell by, you can look at the candles. You can also look at the VRVP if you have the time to count the nodes and see how many buy nodes we have versus sell nodes. But yeah, Palo Alto Networks is one that's definitely on my watch list. I like a closed MACD crossover like that, especially if I have one on the day and one on the week. That's what I like to see. And there's enough space on both. Let me check we checked the week as far as the stochastics. The stochastics on the week has even more, popping back up from 35. So yeah, Palo Alto Networks is one that I'm watching. Again, I'm thinking that we're going to go back up and test resistance. We just need to maintain above the 330s. If not, we should be pulling back to the 320s. If we pull back to the 320s, I'm looking at buying for a long swing, because if we pull back to the 320s, you can see how much is on that line, how much support we have there. We got a lot of action here, here. It goes back. So 320 is a heavy support line. And again, you can see that we've already bounced off of that, and we're above all of our moving averages. So Palo Alto has a lot of upward momentum. And again, this is one of the top stocks that I'm watching for this week. Do I have any questions? Cool. Let's keep it moving. All right, the Qs, or the QQQ, however you like to pronounce it. All right, so it looks like right now the Qs sitting right. Let me zoom in some first. The Qs is sitting right around this area. You can see this is the green candle here. We're at about 450. If we break above 455, it looks like 460 could be another ceiling. You can also look at this VRVP to see that that's another little level of buys and sales that we have that are sitting there. And we can also see that before we had some choppiness here and we had some choppiness there. So let's say the market is green, everything is moving up and recovering from the last few weeks. Again, my targets is 455 and 460. After 460, we could get a bump up to about 465. You can see that 20-day MA is 464. It could be coming down some more depending on how fast we race up against it. But again, my target right now at 450 is 455, 460, and we have a high of about 465, 464. Reason why I'm saying that is because if we look at the RSI, 42 on the RSI pointing up. We also have the MACD. It's starting to soften to the buy side. So we don't have as close as a gap as PA and W, but we are forming a MACD crossover to the upside. We also, if we look at the stochastics, 42, pretty nice on the stochastics. We have space to go up to 50, 80, 100 for a move to the upside. So that's what I'm looking at. Do I think that after we have this MACD crossover and the move to the upside that we're done? No. We could reject really hard and come back down, but I'm looking at this for just what I can see. And for the week, it looks like we're going back up, and we may have some trouble once we get, north of 460. But right now we're looking good. And again, if we do break that 20 at 465, we could go up potentially 473, but that's dreaming right now. Again, we still have some downward pressure in the market, and we do have a lot of reports coming out this week. So those reports could swing us one way or another. And again, those reports don't start until Tuesday. So Monday could be a hot day on the green side, but going to Tuesday, Wednesday, Thursday, Friday, those reports, I don't know the prints, but whatever they print should have some impact on the market. All of them are based on inflation or housing. I'm sorry, or jobs. I said housing. Any questions for the Qs? Cool. Celsius. This is one that I've been talking about for a while. I started buying again at about 45. Right now it is at 38, and it's still pulling back. Some people think that Celsius is out of the game. Celsius has been pulling back a lot due to, I would say, some European based regulations on how they sold their beverages and the ingredients involved. But I think that Pepsi is stepping in. Also, they just had earnings. The earnings was nice. It pushed them up to about 45, 46 before they pulled back down to 37, testing that 200. Oh, this is the 200 week. Back to the day. All right. I was going to say, I know they should be underneath their 200. Yeah. So they've been pulling back a lot. The way that I'm looking at this one is that this is a long hold. I think that we could see easily 60 to 70 again before the year is out. We just need to make sure it finds its ground above 35. If this drops below 35, not touching it. But as long as it stays above 35 and it gets back into the 40 to 45 range, then I'm looking for a buy again. So the reason why I'm saying that is we have the 20 MA coming down, and that 20 MA again is right at about 45 where I started buying again. So I want to get above that 20 MA and then go back up towards the 100 MA. But this being so down so far so fast, the RSI is at 19. Is the RSI going, is it going to stay at 19? No, but buying into this stock, you have to be willing to hold for a long time. This is not a short-term play. This is not a weekly call option. This is not a day trade. This is a opportunity to play it back to the upside. Again, I'm looking at 60 to 70 being a ceiling before the end of the year. Again, they just had earnings. Even though the stock is down, they beat earnings. They did well, and they're just still working on how to correct the issues that they had in the past. But then also they have Pepsi, who owns 8 to 10% of the company that they have on the board. And I mean, Pepsi have seen it all. They've, in the beverage sector, they've seen everything. So I'm pretty sure with the guidance of Pepsi that we should be seeing this pop back up to the 60s and 70s. Leaps on Celsius. Yeah, that's what I'm looking at. Leaps, shares, you name it. But you got to give this one some time. Like this is, 2025 at least. And I wouldn't even say early. I mean, that's if you're doing leaps. If you're doing leaps, I would give it spring to summer 2025 just to be safe. If you're doing shares, I mean, you don't have to worry about time decay. So your benchmark could be a little different. But yeah, I think Celsius, again, they beat earnings, which was a great sign for me. And once they clock back above 45, I'm going to be back to buying shares. I may buy some leaps this week at some point. Maybe after all of the inflation reports and job reports towards the end of the week are gone. But yeah, Celsius is definitely one I'm looking at, taking a stab at for a long-term swing. Let's see. Any questions? All righty, let's go. Microsoft, last one. All right, so Microsoft is one that, I mean, I'm never really against Microsoft, especially since Microsoft made the move with OpenAI, which OpenAI has been needing some funding, which could actually work in Microsoft's favor. But I think that Microsoft at this level at 406 is a steal. Microsoft at one point at its high was at 465, and also Microsoft pays a dividend, and then again is Microsoft. So I think that Microsoft could be popping back up. We could see anywhere between 425 and 430 to the upside. Right now, the RSI is at 36. So, like the question we had earlier from I think it was Tegan, when you're buying a low RSI, you have to give it time. The beautiful part about giving a stock time to climb is that you have time to get paid, you have time to accrue more money, and then you can pile it onto the trade while it goes to the upside. Microsoft is one of those stocks that if I'm a betting man and I'm buying a stock on this low, Microsoft is one of those stocks that I'm paying attention to because again, it's Microsoft. But right now, the key for me is they need to hold above 405 to 410. And then once they test that 415 and we can get a break and lock at that 415, we could be moving higher. What I'm paying attention to is the MACD. We have a potential MACD crossover right here. Also, the stochastics is back on the map. For a while, it was below 20. Now it's at 32. I'm looking at hitting that 50, 80, 100 again. And if we hit the 50, 80, 100, that could send us up to about 424, 425, potentially 430. So Microsoft is what I'm watching. Again, with these reports this week, anything could happen. I mean, it's anybody's game, but that's when you set a stop loss, and that's when you practice risk management. Don't get in, too far over your head. I don't think we're completely out of the woods, but I think for right now, we're in a period of, people are buying the lows. We're in a period of recovery from the last 2 or 3 weeks of a downspan. But again, it doesn't mean that we're in the clear just yet. So I'm just paying attention to the midterm. Long term, I'm still bullish. Midterm, I'm bullish, but the short term, I'm kind of iffy because of these reports. If these reports come out nice, perfect. I mean, you'll see the market rejoice. But if the reports come out, choppy, then we're going to get a lot of chop. If all the reports are bad, of course, we're going to have more bleeding. But again, that's why you set your stop losses. I would set them a little tighter now. Like if I'm doing a 20% stop loss, do a 15 is what I'm thinking for me. If I'm doing a 10, I could be doing a 5. It just depends on, how tight you set your stop losses. But from what just happened a few weeks ago, or what started a few weeks ago with the SPY on this downspin, setting a tight stop loss could protect you from, what happened. If it decides to happen again or be something worse, is all I'm saying. But do I have any questions on Microsoft? Boom, perfect. All right. We have, let me see. Oh, you want me to take a look at INTC? Yep, I can look at Intel really quick. Oh, we got someone trying to join. Let's see. All right, Intel E. I think we talked about this one before, and I think I said stay away from it for a second. Intel RSI is at 22. Of course, that RSI is going to recover at some point. Is it going to go back up to 70? Not sure. It's been this low before in the low 20s. It climbed all the way back up to 70, but I'm guessing the stock at that point was consolidating 29. It got up to 36. Yeah, so it went up about $6 or $7. But RSI being low at 22, the POC is here at 30. The stock is down to 19, just had earnings that were pretty bad. They also announced that they're dropping 15,000 employees. So right now, what I would do with Microsoft, if it's me, I'm waiting for it to find a ground. It looks like the ground is around this 20 area, but it could go down even lower to 15. Let me back out some. It's the lowest it's been in a while. Yep, this is the lowest it has been in a while. All right, so yeah, with Intel, I would wait until it finds a bottom. I mean, you could keep your eye on the 2175, 22 price range for it to go back up and potentially fill this gap that would take you back up to about 2830. But I mean, you're asking for a lot. Again, they're dropping off 15,000 employees. I mean, at this point, I think what will send Intel up is if someone wants to buy it. I've been hearing that Buffett could be could have potential interest in Intel. I'm not totally sure because dropping 15,000 employees is major. And then we have to see the ramifications of that in the future. But I think that Intel right now still needs to find this level of consolidation and to find some interest from buyers if we're playing it to the upside. So the downside, again, I think that if it breaks below the low 19s, mid 18, we could see, worst case scenario at 15. Again, if the market pulls back, this is still going to pull back some. And I think, again, the worst case scenario for me would be 15. At $15, I don't know if I still don't. I'll have to be compelled to buy it even at $15. But again, popping back to the upside, we could see it anywhere between 25 to 30. I can put a resistant line there at about 24, 25. Again, you can see we have a couple of bumps here. So that's what I'm seeing for the height. The height, I'm seeing 24 and 25 as far as resistance. Support is sitting right on it at about 20. If it drops even lower, I'm looking at about $15, $16. Does that help, Ross? Okay. Cool. All right. That is my last one. We are at right at the end. So we're finishing on time today. We're at 7:52. What I'm going to do is let me stop sharing my screen and stop the recording. So this can go to YouTube.